and good afternoon, everyone, and welcome to our lunchtime webinar series. Today, we are covering a topic that is crucial to our small businesses and many times crucial to their success, gaining access to capital. We have another great session planned for you today with lots of valuable information for our small business owners who may or may not be knowledgeable about how to combat the financial needs of your business. So stick around. You will hear from a representative of one of Florida's most knowledgeable organizations, and you will be hearing about their programs and what they have to offer and how you can get this. My name is Sidoni Naismith, and my company is Black Swan Events, which is a consultant firm that provides advisory services, technical assistance, training, and support to small businesses in the area of financial planning, government contracting, business development, and meeting planning. Now, this program is brought to you by Black Swan Events in the MBDA Export Center, which is operated by M. Gill and Associates. Now, through the MBDA COVID-19 Recovery Initiative, which is an M. Gill and Associates project, this is funded by the CARES Act grant from the U.S. Department of Commerce, MBDA. And for you that don't know, the MBDA actually stands for the Minority Business Development Agency. So Black Swan Events, Inc. is a management and consulting firm that is covering the Broward and East Miami area. We provide technical assistance to small businesses that are impacted by COVID-19. And to give you an idea of the type of services that we provide, you will see on the slide here, technical assistance would be anything from business planning, helping you with certifications, helping you with really getting the tools you need for your business. Other areas would be sourcing capital, contract sourcing, business matchmaking, export development, and you name it. There are a few that's still not listed here. So now, before we get started, I always like to do this. I want to launch the poll to see, first of all, where you're joining us from. So if you don't mind, please do go ahead and let us know where you're joining us from. Okay, we have some Broward, Miami-Dade, Palm Beach, and other areas of Florida. Nothing yet coming in from outside of Florida. We're good, we love Florida. So I'm gonna end that poll. And of course, I'm gonna share the results with you. So we have 64% coming in from Broward County and Miami-Dade, 23%, another 23% coming from Palm Beach County. I'm going to launch one other poll because I am curious in terms of type of assistance that will actually let me go ahead and relaunch this poll. The type of assistance that you would more than likely need or in need of, whether it's contract sourcing, finance, capital, business or resources, certifications, we have exporting, we have legal assistance here. All of these are services that you could contact us for. And if we can't do it, we put you in touch with someone that can. So I'm gonna close the poll in a minute. I see others are still chiming in, and I'm gonna close it in a second, actually, right now. So we see that there's a heavy need. You're in the right place. There is a heavy need here for finance and capital, followed by certifications and some contract sourcing. So thank you so much for that. Thank you for that information. We always try to get these programs designed for you to address all the areas that you should be aware of as small business. So we bring you the experts. We always bring you the topics and just based on your feedback, and also we provide the service. So now to the reason why you're here. And I do remind you that this is an informal session. It is a session that really we want you to interact. Don't be shy, ask your questions. You could either type them in the Q&A, or you could raise your hand and I'll open your mic and you could ask Jeff all the questions you have. I'm pretty sure you have a lot. Now, I'd like to introduce Mr. Jeff Tart. Mr. Jeff Tart is a senior loan officer from the South Florida Regional Planning Council. Mr. Tart is an experienced business banker and lender with over 30 years of banking experience. He has held commercial banking positions with large banking commercial banks and small community banks in South Florida. His familiarity with local businesses and real estate markets in South Florida has enabled him to be successful and to originate and administer both business and residential construction loans. Now, Mr. Tart identifies, underwrites, and recommend business financial needs to small, local, medium-sized business and minority businesses, and seeks to provide construction financing of single-family affordable homes to first-time home buyers in South Florida. His additional duties include coordinating the closing of business loans and affordable housing construction, financing loans, and monitoring loan progress until the completion of the transaction. So I say all that to say, Mr. Tart is well experienced in the area that he is about to share today. And specifically, he will be covering funds that are in fact available in the form of loans. And Mr. Tart will have the opportunity to just go through the details with you. And like I said, don't be shy. Please do feel free to go ahead and ask your questions. So without further ado, Mr. Tart, please take it from here.
Perfect. Thank you for that introduction, Sidoni. That's fantastic. And yes, I am a career banker that had many years experience being on the commercial and community banking side. And I joined the South Florida Regional Planning Council a few years ago to really use all that experience and help small and medium-sized businesses, and certainly with a focus on minority business owners, really have access to capital like other businesses have, to level the playing field. And what I did learn very quickly was, especially with the COVID impact, is that small and medium-sized business owners, and certainly minority-owned businesses, really had a disproportionate amount of a negative impact on their businesses, certainly in terms of resources and financing ability. So hopefully today, joining Sidoni, you and your organization here, to really make available and speak about some of the financing programs to help small and medium-sized business owners, and certainly minority-owned businesses. Just a little bit about the South Florida Regional Planning Council. We are a Florida state agency. It was created in 1974, really to have a single resource for all of the counties from Broward, Miami-Dade, and Monroe to be on the same page and discuss issues and planning and legislation that affected not just businesses, but residents of South Florida. And with the good work that they've done, they've been recognized by the Economic Development Administration, that is a government agency funded under the U.S. Department of Commerce, with monies to help small and medium-sized businesses such as yours and certainly with a focus on minority-owned businesses. So today, I'm going to talk about one of our main programs that we are offering with monies, loan monies that the government, the U.S. Department of Treasury and the Commerce Department provided to us in form of a CARES Act grant to make loans to our small and medium-sized businesses in South Florida. So I just need to reiterate, these are loans. These are loans to be provided to businesses that are having trouble or unable to obtain financing from traditional means because of the impact of COVID. So your business, if you have been impacted by COVID, you can certainly review some of the information that I have that right now is listed online, and we'll discuss what some of those guidelines and requirements are to see if you qualify. Again, this is not grant money. These are loans that you need to qualify for, understanding that your business has been impacted by COVID. So let's just start out with a little more background information of the CARES Act monies that are available to small and medium-sized businesses. This is a program through the Economic Development Administration that provided South Florida with $5.38 million. It's a lot of money, and it's solely to help small and medium-sized businesses that meet the guideline that have been impacted by COVID. These are not businesses that are startups. These are not businesses that are hobbies with no past financial history. These are good existing businesses that have been in operation for at least 3 years. 3 years that have been impacted by COVID. The monies were granted to us in March of 2020, and that was the coronavirus aid package, or the CARES Act. And SFRPC and myself and our team oversee the administration of identifying prospects such as yourselves to see if you meet the guidelines and can apply and hopefully be successful in obtaining some loan funds to help your business. So who's eligible? Eligible are small and medium-sized businesses, sole proprietors, and even 501c3s. So if you have an organization that is a 501c3, a community center, a housing organization, we can certainly try and help you. The location of those businesses, where do you have to be located? You do have to be in South Florida. So you have to be domiciled and practicing your business in South Florida. That is actually from Palm Beach County, Broward, Miami-Dade, and through Monroe. If you're out of state, our monies cannot assist you. And you really have to be in South Florida and headquartered and operating in South Florida. Financing amounts, how much is available? Well, each applicant can apply between $25,000 and $500,000. Now, the loan amount is going to be right-sized for the purpose of what you need it for. So even though you may not know what an exact amount you may need, we can certainly discuss that. It doesn't mean if you write down a particular amount and that amount does not meet your needs, you need a higher or lower amount, that does not disqualify you. That's part of the application and underwriting guideline. So certainly our job here is to right size your loan amount with your need. And your need happens to be a shortfall financing need to help you sustain your operations. So what does that mean? Does that mean these loan monies are for emergency monies, to pay rent or to pay payroll? These monies are not actually. Other programs that exist, such as the SBA programs, the PPP programs, the state of Florida had a bridge loan program. There are other short-term emergency need loans or grants, that the SBA or the state provided. If you happen to obtain one of those types of grants or loans, our loans could be used in conjunction with those monies as well. It's not one or the other. You could certainly have both opportunities to maintain your business and keep your business operations going. So the difference between those programs and ours, very simply, is those emergency short-term loan programs to help pay payroll, your rent, your utility bills. Those short-term financing needs are those programs through PPP, the SBA. Your local counties have small grant programs to help with those emergency needs. Those programs can be used in addition to ours. Our financing guidelines are to help existing businesses after those emergency needs have been met to keep your business operational. Meaning, if you have a business that you are low on cash and you need to purchase equipment, supplies, materials to keep your business going, to meet a contract that you don't have cash resources to purchase, this is a guideline that we can help you with. If you are looking to expand, you are impacted, but you need money to help continue building out your new office space, your new warehouse, you need to purchase equipment to help fulfill contracts that you had, but you can't because you were impacted by COVID, we can help you with that. So what I'm trying to convey is these loans are to bridge your operation from a point where you may have been impacted by COVID to keep your operations going. These monies are to help either acquire machinery, equipment, a commercial vehicle, to help with purchasing inventory, materials, to keep your businesses going and operating. Very different from you needing monies to keep your lights on or pay your mortgage or pay your rent. These are not monies meant for those types of needs. We went over the amount. What's the interest rate? The interest rate is between 3 and 4%. It's a very low interest rate. It is a loan, so it's not a grant. It needs to be repaid back, but the government made the interest rate extremely low, between 3 and 4%, and the loans can be repaid up to 10 years. We decide, once we get your application, we discuss the term length that meets your purpose and your repayment schedule. We certainly need the monies repaid back, but we also have to maintain a cash flow, positive cash flow for your business, so you're able to meet all your expenses and also pay us back on a scheduled basis. And that can be up to 10 years. So I just want to step back to discuss businesses. If you have a business and you don't have a business plan, or you don't have an active or updated budget, I want to circle back, because Sidoni and her Black Swan events, and certainly the MBDA, is your first stop to be able to discuss if you can take on a loan and meet the obligation of paying it back. It's very important, if you do need a loan and you meet the guidelines, you want to understand the obligations and the responsibilities of obtaining a loan and making those monthly payments and paying back these federal dollars complete. This is a federal program. Taking on a loan is a big responsibility. It can't be ignored. It can't be defrayed. It has to be repaid back based upon the obligation of you taking these monies. And in order to help you do that, there's resources to help you. And that's where Sidoni comes in, and representatives of the MBDA can help you put those plans together if you don't have, to make sure you're on schedule to make those loan payments. Very important to have your financial house in order when it comes to your small and medium-sized business. I get a question a lot as to business credit, and it comes to mind right now. It's very important, if you're a business owner, having a positive business credit is very important, and you build a business credit reference by taking on business loans, taking on business credit from your suppliers, and making sure those lines are paid and those payments are made. When any type of financial institution is going to review you for a loan application, they are going to make sure and see if you took on any other trade debt, personal debt, or business debt, to see if you have maintained those obligations and made those payments on time. The better your business credit and your personal credit, the better chances you will have now and in the future when your business grows to get larger credit facilities. We all hope that your small businesses grow to medium-sized businesses and grow to larger businesses. But the way to do that is having your financial house in order and maintaining and managing those credit facilities. Personal credit scores are very important as well. Here at the council, because we understand COVID has impacted small businesses, a lot of people's personal credit may not be as strong as it used to be. We understand that. So when we look at your application, not only do we look at your past personal and business credit, we look at your past financials, and we understand everyone has been suffering and impacted by COVID one way or another. And how we mitigate those reductions in personal credit or business credit is looking at your past financials. In the past, prior to COVID, did you meet your obligations? And if you did, we understand that, and we can mitigate and overcome the impact that you had on your current financials. So we do require businesses to be in business for at least 3 years. These are stable businesses that now have been impacted by COVID. So we look at your financials prior to COVID, and we look at your future budget. How are you planning on getting your financial house in order post-COVID? Everyone's been impacted during COVID, but what are you focusing on post-COVID to help stabilize and grow your business? And financing has a role in that, but a business owner has to be able to show that he has or she a financial house in order. A few things I just want to discuss to keep in mind regarding the CARES Act program is that it is a longer-term financing program, as discussed, to help stabilize existing businesses that have been impacted by COVID. It can be combined with other emergency relief programs that you may have received. A lot of our applicants did receive other emergency funding. That is okay. And also personal guarantees and collateral are required. A business owner has to put their money where their mouth is. If we're going to provide financing to you, your business, you need to personally guarantee that that money will be repaid back and provide collateral. Collateral is a big discussion with our applicants and prospects. It can be business assets. It could be residential real estate. It could be commercial real estate. It could be vehicles. It could be business equipment. Collateral is required. If you're operating a business and there's no collateral, we have to certainly discuss that. But in our history has shown if you have an existing business for 3 years or more, you already have business assets that are already part of the business, and that can be equipment, vehicles, machinery. There are existing assets that you may not think about that you already have for the equity that you invested in your business. What did you purchase for that business? Ovens, equipment, machinery, equipment, vehicles, or if you have real estate. So all that is open. If you don't have any collateral, or this is a business that you just started, or this is a hobby that you're looking to turn into a business, this program is not going to be, you will not be eligible for this program. There are other grant programs through the counties that may be able to help you with those particular needs, but not this program. And why is that? Because even though the government did provide us $5.38 million, there is a tremendous need in South Florida for these monies. So we want to help as many businesses as we can. We want to help as many essential businesses to make sure the economy is stabilized and growing. So those businesses will have a priority over other businesses that don't have collateral, have not been in operation for at least 3 years. And $5.38 million, we are trying to help as many suffering businesses, small and medium sized, and certainly minority owned businesses, because that's where one of the greatest needs are. How do you apply? If you think after hearing my presentation for the CARES Act today, you visit our website. Our website is caresactrlf.org. It takes you to our webpage. At the bottom, there is links for applications, what financials are required. Generally, those financials are 3 years business tax returns, 3 years personal tax returns, and a personal financial statement on the owners. And that information is then submitted back to myself at the council, and we review those applications and prospects. But please, if you do not have your financial house in order, or you know you need to get it in order, meaning if you don't have financials, if you don't have a budget, if you don't know how to put together a budget, and you are in search of an accountant or an advisor who can help prepare your financials, that's where Sidoni and the MBDA can come in and help as well. If there's any questions now on the CARES Act, certainly share them with Sidoni. This is an open dialogue. If there are no questions, you can certainly provide questions to me after the presentation today. But if not, I'd like to go on and discuss our traditional RLF. But Sidoni, if you have any questions you want to bring up or ask me regarding the CARES Act program, I am open.
Perfect. Thank you so much for that breakdown, Jeff. Yes, we do have a few questions. One is asking, is there a revenue limit for businesses to be available for this loan? Is there a revenue limit for this?
There is no particular revenue limit. However, your business needs to have shown profitability prior to COVID. Prior to COVID, it needs to show profitability. If you had a business that was losing money or not profitable prior to COVID, there are issues you have to address with that business before financing can be made available with this particular program. We are looking to help as many good businesses stay in business. We found through our research, if you had financial issues prior to COVID, there are bigger issues at play with your particular business that was not related to COVID. So at this point, not knowing any additional specifics, you would need to show or be profitable prior to COVID.
Got it. Thank you so much for that. This is something that you did address, but someone is asking, maybe they got on a little bit later. To be eligible, do you have to have been in business for a certain amount of time?
Yes, we are requiring 3 years operations. 3 year operations, we understand during COVID of this year, you may not have been profitable because of the impact. We understand that. But prior to COVID, your financials should be reflecting profitability so we can ensure sustained operations post-COVID.
Okay, very good. Thank you. Someone else is asking, is this loan directly from SBA?
Good question. This is not. SBA has their own specific loans. This is not. This is an EDA loan from the federal government, a different agency, but our loans can be used in conjunction with an SBA loan.
Great, wonderful. And I do remember you mentioning that, using it in conjunction. So it does not matter if you had an EIDL loan or a PPP loan. You could apply even if you have a SBA loan.
Correct.
Right.
Yeah.
All right. Someone was asking to please repeat the website or post it in the chat. I'm pretty sure my tech person will post it in the chat, but Jeff, please go ahead and
sure.
The website. Thank
you.
The
website again is www.caresactrlf.org.
caresactrlf.org. All right. Wonderful. One last question here for this topic. Our business is profitable and have inventory as collateral. Can we provide these as collateral instead of hard property collateral?
Yes, yes, you can. And that's a good question. And your financials should show, or if not, you need to put together a spreadsheet or a list of those assets, those inventories, and what their values are. And a consultant or your accountant or the MBDA can certainly help show you how to do that. But yes.
Wonderful. We have more. We have more questions, which is why we're here, which is great. What if you just broke even? What if you just broke even every year within your business prior to COVID?
Right. Well, it's going to be, unfortunately, it's going to be quite difficult because it's very simple. If your financials show a break-even amount, it will be difficult for you to be able to make loan payments. So understandably, we know you're at a break-even. However, in order for you to be able to take on a loan obligation and pay that loan back, there needs to be additional revenue support or future cost reductions at your business to be able to make those loan payments. Your financials should very easily be able to show, or your future budget show, excess cash flow for you to be able to make the monthly loan payments. So if your financials can't show it, it will be difficult for you to make those loan payments and fulfill your obligations.
Okay, very good. Thank you so much for answering that. I'm pretty sure a lot of people had similar thoughts or question, especially if the business is new or pretty young within those 3 years. All right, there's another question. What is the maximum amount can one obtain from this program? Is there a maximum requirement for collateral? So that's 2 questions.
Yes. The loan amount is a range from $25,000 up to $500,000, up to $500,000. The collateral has to be suitable collateral with value that is as equal value of the loan amount. So certainly we don't need more collateral than the loan amount, but we need suitable value, suitable collateral that generally equates to the value of the loan.
Okay. Very, very good. Very good. All right. One last question here. If you have been in business and operations for 4 years, but only have 2 years of balance sheet reporting, will that suffice?
Yeah, my response would be that why don't you have financial reporting for all the years that you've been operating? Perhaps maybe it was a startup, and at that time, your first year or two, you didn't have financial reporting, but your most recent financial reporting then has to be provided by an independent accountant or administrator or bookkeeper to show that those financials are indeed correct financials of your business. So if there's an explanation that could be provided, certainly that would be okay. But financials do need to be prepared and provided by an accountant, by a consultant, by a record keeper. And generally, those would suffice.
Okay, wonderful. So to go back to that question, so they've been in business for 4 years. They only have 2 years of balance sheet reporting. So if they get with a accountant, CPA, any financial person that could help them to put together or to vet the 2 years that they do have, this sort of would suffice. Is that correct?
Yes, as long as the 2 years are the more recent 2 years and not the older 2 years. So if they can show they have 2 years financial records of the most recent 2 years, plus a budget going forward as to how they project themselves, the financial results going forward, that may be okay. Yes.
Okay, wonderful. And to be correct, you don't only look at balance sheet, you look at all three financial statements, correct?
That's correct. Balance sheet in itself is not meeting the guideline. It's an income statement and a balance sheet for 3 years generally.
Do you
Income
also,
statement, balance sheet, or tax returns.
okay. Do you also look at the cash flow statement as well, or that does not?
We do, and we lump that into an income statement. So
Got
the
it.
cash flow statement or the income statement, yes, it is required.
All right, perfect. We have two more questions for this, and they're very quick. Can this loan be utilized for export funding?
It could be if the business is domiciled here in South Florida and you need financing to help fulfill contracts that you have for your export business. It can, provided there's contracts in place, providing there's no issues with the customer taking on the receiving of the merchandise. So we have to do a little more due diligence, but generally speaking, yes, if you have an import-export business, you've been impacted, but you do have contracts you need to fulfill that have been impacted, we can certainly look at providing financing for that, yes.
Okay, great. What if you need less than $25,000?
Unfortunately, we cannot provide that. There are other programs. I would refer that individual to their county. Broward, Miami-Dade, even Palm Beach have small grant programs for monies under $25,000.
Okay, great. What if you have a purchase order for goods and you need financing just to cover the purchase order as a client pays net 30? I believe you did mention that, but please explain that again.
Yes, that is a good fit for our program here, provided the business is not a startup, provided the business has 3 years prior financials, has been profitable. Yes, this program would fit the needs to be able to provide financing for you to fulfill that contract. Once that contract has been fulfilled and the money's paid, the loan can be repaid back with those proceeds.
Jeff, thank you for answering that question. And our attendee, thank you for asking that question. We come across that a lot. So it's great to know that you can go to SFRPC to get that, because that's a big need usually when people get awarded a contract.
Mm-hmm.
I don't have any more questions for this, but this was really good. You want to continue to the next?
Yes, and actually that's a good transition. We're now going to move on to our traditional RLF. And what's the main difference between the traditional and RLF? Very simple. Our traditional RLF is for businesses that have not been impacted by COVID, such as the last attendee that sought an answer to, is there financing that could be provided to a business that has a newly won contract but needs financing to help purchase the inventory or the materials so that they can make their product. This is a good fit for our traditional RLF. The same loan size, $25,000 to $500,000. It's based upon the borrower's needs and repayment ability. So in that particular question, the borrower can borrow up to $500,000 based upon the need in order to fulfill that contract. And the repayment ability would be, once that contract has been delivered and the money's received, that the repayment would be of the payment to the buyer, to the seller, who can then repay our loan back. These are traditional RLF needs. If a business is expanding and needs to purchase new equipment, if it's a bakery, if it's a school and they need additional equipment, if it's a business and they need additional inventory, if they need vehicles or simply working capital, these are traditional RLF needs. It's the same application, it's the same underwriting process. And our website for this particular program is just a little different. It's not the CARES Act website. This website is SFRPCRLF.org. That's our initials, SFRPCRLF.org. And that website is our traditional RLF that has our RLF application, financials that are needed, and our personal financial statement as well on the business owners. This program is our traditional. It's been around for many years. We've helped a tremendous amount of businesses retain jobs, expand their jobs, expand the businesses. And really how this program came about was strictly to help small and medium-sized minority-owned businesses that were unable to obtain traditional financing for various reasons from commercial banks or community banks. So the council came out with this program years ago to help foster small and medium-sized business growth, minority-owned businesses in particular that were unable to obtain financing. The same underwriting guidelines are intact for this program: 3 years operations, 3 years business tax returns, personal tax returns, collateral is required, and a personal guarantee is required. The underwriting for these programs are to help those businesses that really are just not getting the same opportunities that commercial or community banks are offering. So this program has been a tremendous help. It's been acknowledged by the SBA. It's been acknowledged by county commissioners as really stepping up and filling in a niche that has really been absent by our traditional lenders. Hopefully, Sidonie, you can share our flyers with all the participants today. That's pretty much all I have on this, unless there's any additional questions for me.
Absolutely. This was great as well. It's good to know that you basically fill in the blank for small businesses with this type of loan. A lot of times they can't get loans in other places. This is a really good way to bridge between the gap, so to speak. All right, we do have a few other questions. One is asking, it's a specific question. I know that you prefer to address specific questions off air, but I'll go ahead and read it so that if anyone else is experiencing anything similar, they know that they can reach out. So it says that we just purchased a ready to move in building. Can we use the loan for redoing the roof, new asphalt work for the parking lot and furniture and new machinery? The total is $500,000.
Yes, actually, this is a good fit for that particular need. These monies are to be used for build out, repairs, maintenance, upgrades of a facility that will be housing a business. And the repayment of this loan, once again, has to be the positive cash flow from the operations of the business. But yes, this is a good fit for this particular program. Yes.
Okay, great. And I did remember you mentioning that. So that's great that attendee asked that question. One more question, follow-up question: how soon will the money be available?
The money is already available, and we're looking for good homes to deploy the money to.
Okay, great. And then so follow up to that is that does it take usually a month, a few weeks? Is there a process that they have to go through that you can explain?
Yes, very quickly. The process generally takes between 4 to 6 weeks of a complete application. Once a complete application, meaning the application and all the financials and any follow-up has been provided, once that is all obtained, between 4 and 6 weeks from loan approval to loan closing.
Okay, great. That is not bad. I know some people are still waiting for their SBA loans. So that is relatively quick for this type of loan. All right, another question is for the traditional RLF, what is the average interest rate?
Right, the average interest rate is about 5%, generally between 5 and 6%, but currently it's around 5% for the traditional.
Okay, great. I have a real estate investor here. Can a full-time real estate investor qualify for these programs? I know you hit on real estate. Let's talk about that, Jeff.
Right. Generally, real estate investors are not qualified for this particular program. It's an operational business loan. Real estate owners could apply if the monies are to be used specifically for rehabbing structures, multifamily buildings, a property that is housing an operational business in. The monies cannot be used for investment real estate for just investing purposes.
Okay, great. But you did mention something about real estate in the, can you go over that a little bit, just in case we have anyone that came on a little bit later? And I know you and I had a conversation as well that you mentioned like a multifamily or another situation similar.
Right. If there's a landlord or a property management company that owns a multifamily building that is in need of repairs, upgrades, new roofs, we are looking to assist those property management companies so that those tenants are not displaced. In that particular scenario, we would be more than willing to be able to help the property management or the landlord make necessary repairs to those buildings so that the tenants are not displaced. So that's where we would be able to help a real estate owner.
Okay, and that is really good. That's really good. I can imagine that there's a lot of that going on right now during this time.
Yes.
So that's great. Another question, is the revolving loan program alike to a revolving line of credit, or on average, what does the interest rate for this program look like? Just answered some of
Right. No, actually, the monies that the borrowers receive are term loans. It's a lump sum monies for a particular purpose, and the repayments are monthly. These are not lines of credit where they can draw monies on an as-needed basis. Generally speaking, these are term loans, lump sum to meet the needs and the purpose of the loan request.
Okay, very good. Thank you. Can either of these loans be used to pay off credit card debt?
Absolutely not. Absolutely not. No.
Absolutely not. Okay. So that more money can use towards repaying loan. Okay. So you answered that already. Okay, great. Okay. Now, final question would be, if you could just circle back to collateral and just explain what are examples of collateral that you can use.
Right. Suitable collateral can be, it could be equipment the business owns, it could be inventory, it can be receivables if a business is owed money because they didn't collect it from the buyers of the products. That can be suitable collateral. Vehicles, if a business is looking to purchase equipment because they're expanding, that newly acquired equipment can be collateral. Collateral could also be the real estate that the business owns, or it can be any sort of equipment, vehicles, or real estate, pretty much, or any business asset that a business owner can identify on their balance sheet of having value could be considered collateral.
Wonderful. Thank you so much, Jeff. I enjoy this topic because I'm a finance girl myself, and been in corporate America, working 20 years and doing finance, doing budgets and forecasting sales, and many other things, capital expenditures and a lot. So I enjoy this topic. I know it's tough for a lot of small businesses, so tough for a lot of people to even talk about finances, but it's just something you have to face. You have to look it in the eye and say, where am I? Where is my business and where do I need to be? Because if you don't get that part right, then you'll never be able to get a loan or to get ahead. So thank you. Thank you. If you don't have anything else, I mean, this has been wonderful. Tell us again how we can get in touch with you. I know we had your slides up and everything, but please do.
Right. The best is to visit our websites. Again, for the RLF, our website is, our traditional RLF is SFRPC.RLF.org. Our contact information, emails are on that website. And for the CARES Act, it's caresactrlf.org. And our contact information and emails are on that website as well.
Okay, all right, very good. Thank you so much. I hope everyone enjoyed this program. I do have a raised hand, so I'm going to go there just in case this person wants to go ahead and ask a question.
Hi, this is Sherry Rudolph, and I wanted to know if you have received the EPL loan or the the
PPP.
The PPP or the ELIP loan. Would you still be eligible for the loan that you're talking about?
Yes, the good news is these program monies can be used in conjunction with the PPP and the EIDL monies if you receive them.
Yeah, so, the EIDL, I'm sorry.
Yeah, it's okay.
Yeah, that was my question. Thank you.
You're welcome.
Okay. Thank you, Sherry. Thank you for that. And that's one of the things that I really enjoyed about this program, because there's so many of these loan programs that are out there that if you got the SBA loan, you would not be qualified. So when I saw this, I immediately said, we have to dive into this to see how we can qualify, what you basically would be able to qualify a small business for, and how do they really get these funds? How are they available? And you know, just out of what you just said today and what I learned, that this can be used in conjunction to the SBA loan, right? This is something to keep your business operational, which is great. If you need to fulfill a contract, you can also go to, business could also go to you for that. They could use it for build out, machinery, inventory, and materials. My little paper that I wrote on here, I just scribbled them down, but this is great. The interest rate is very low, 3% and to 4% over 10 years. I mean, this is amazing. Mm-hmm. This is a great program, and I hope to be sending some of my clients your way, and we can work together on what they need to get them loan ready, because that's the word for me. Exactly. Are you loan ready? Right. So thank you again. If there's anything else that you'd like to share, please do.
That's it. So we're looking forward to applications and prospects. So hopefully this was helpful to everyone.
It sure was. I'm going to bring everyone to our